I'm going to show you the most unethical thing I've ever seen a financial advisor do. I'm going to walk you through the specific example so that you can see the frustration that I have with financial advisors and why I take my job very seriously. Now, my why, why am I literally an advisor, is because my parents were burned by 4 financial advisors. So if you don't know the full story, you can check it out here. The last thing I ever wanted was to become an advisor after what I saw. I wasn't even sure if this industry was for me. I did a LinkedIn post talking about it here, and then everything changed. So if you want to see the full video on that, you can certainly click that here. I'll put it in the description. But for today, I'm going to walk you through, okay, what is this unethical practice? And a common question that I'll receive is, hey, when does it make sense to work with an advisor? And I'm the big guy that's very transparent about saying it depends on timing. There's a lot of people that reach out that go, look, I have $1 million in a 401k. I like your videos. It seems more transparent than I normally see. I'm ready to start working with you. And I'll go, you shouldn't work with me. And they're like, why? And I'm like, well, there's not a ton I can do. If you're 40 and you have a good 401k balance, you need to make sure you're maxing out your 401k, you're diversifying and maybe getting a superhero account, which is a brokerage account that I talk about. Maybe you're getting more intentional with retirement timing. But outside of that, it's not like there's a ton of customization that's available. Now, if you have a lot of significant equity compensation, if you have a ton of tax strategy needs because you're a business owner, if you're about to retire next year and now you have to turn on your own income and know, where do I withdraw from? Okay, yeah, that's when it can make sense to work with an advisor. But I am that weird advisor that says everyone doesn't need one. It depends on timing. So what I'm going to show you is someone who reached out to me who is very transparent and said, look, I think I want to hire an advisor. I don't know, but I just want to see the value. I said, it's a very dangerous question. And they said, why? I said, can I tell you a story? I said, it's going to go a little longer than our 30 minutes together for that first call that our team will take when someone reaches out to work with us. And they go, yeah, I don't have anything. I said, okay, I'm going to show you it now. And that's what I'm going to show you guys. So this is what happened. So this is a real person that reached out, okay? This is their plan. And so here they are today. They're 63 and 61. They have a child who's 28. This is a real person. Once again, this was something when they came to me, they already had their information in the software. So this is something that's called the Academy, the Early Retirement Academy. You don't get one-on-one guidance. There's no, I'm not calling you up or anything. But if you just want to run your own what-if scenarios and build a plan, you can do this. And this is where I recommend people at a minimum start. Now, a lot of people go through this and go, this was helpful. I now realize I want to work with an advisor. Okay, that's awesome. Like, this is just kind of a gut check. It's not going to be the most optimal thing you've ever used. It's a few $100 for a reason. But this person reached out saying, hey, I'm already in the academy and here's my information. And it made it so our conversation was a little bit more impactful and helpful. And they have about $2 million and they are 63 and 61 years old. And they said, Ari, I went to one advisor and they told me that I should be really careful and I shouldn't spend too much money because I don't want to run out. I said, okay, go on. Like, I don't want you to run out of money either. And they're like, yeah. So they told me that a lot of people should just work till 65 because it's like a no-brainer. It's like, why would I not do that? I'm going to explain all these numbers in a second. And I said, I think what they're doing, I don't know for a fact, but if you go to an advisor, it's easy for them to say, work till 65. Don't worry, you won't run out of money. It's easy for them to say, hey, why don't you just spend $5,000 a month? Yeah, I know you want to travel and go out to eat, but don't do that. How about just don't run out of money? And they said, okay, they were confused. I said, this is the unethical practice I've seen an advisor do, and I'm going to show it to you. So what happened in this case, here's someone that, I would encourage. Here, they have $2 million. They want to work till they're 65 because they enjoy their job. Okay, they don't want to die with $5 million. So here is me saying, what if you spent $10,000 a month in retirement instead of $5,000 a month? Well, if they were to do that, you can see, yeah, there's 1.7 left over, not 5 million, but they didn't want to die with 5 million. So I'd rather them spend more and enjoy their retirement. Here's the unethical practice I'll see an advisor do is they'll say, how about this, Jane? Why don't you guys don't plan for vacations, no health care, $5,000 a month. Guys, don't you want to not run out of money? And by the way, that current allocation you have, I don't know if it's optimal, but it's worked so far. Let's just keep that. And what they're going to do, I'm not saying every advisor does this, it's just something I've seen, is they'll show they're on track for $5 million, which, okay, $5 million. And they'll go to this tax button here. Now, they don't have this button, but they're using their example of that. And what they're going to do is they're going to go, hey guys, so check this out. Look at this. $4 million more through doing these super fancy Roth conversions. Now, if you don't know what a Roth conversion is, basically it's tax arbitrage, which is a fancy way of saying, if you know in the future you're going to be in a high tax bracket, like this person right here, they're going to be in a high tax bracket, 75. The required minimum distributions are going to begin, whether they want to or not. Otherwise shown, and I'm going to come back to this, so thank you guys for sticking with me here real quick. If this person, once again, so here they are, they make 63, they're 63 and 61, they make 200,000 a year, then 206,000, then boom, zero, they retire. Now they're living off of Social Security or a brokerage account or something like that. If we fast forward to 75, you can see now there's a lot of income coming in, meaning they have Social Security coming in, 2 benefits, plus required distributions. And these distributions keep growing. So they might be, 85 with $430,000. Guys, they don't want $430,000. They want $138,000. So all of this money, it's called spend unsaved. I don't really like the way they title it. All of this gets taxed at their highest marginal bracket, okay? So what an advisor will do, which I think is just crazy unethical, is they're going to say, guys, I can save you a ton in taxes. We do these fancy Roth conversions. Look at this. You'll have so much more tax adjusted dollars at the end. And what the advisor is trying to do is they're trying to essentially justify their fee. Now, this is a really tricky subject. We have a document that we talk about. What is the value of financial planning? When you're going to work with an advisor, can you quantify that advice? Some of this easily you can quantify. Oh yeah, picking lower investments, tax loss harvesting, asset location, rebalancing. But I'm the weird advisor that will say, I don't think you should work with an advisor if you're only getting investment guidance. I think you can go pick 3 ETFs, a few index funds. I don't think that's the value. The real value is in the tax strategy. It's in the estate planning. It's in the Social Security. It's in the healthcare. It's in the Medicare. It's in the insurance. Then ultimately, like, you're paying an advisor so you don't have a new job. You're spending money to free up your time and ensure things actually get done. And so the point here as to why I'm showing you this is an advisor I've seen try to justify their fee by doing something like this. Look at this. So now John and Jane might see this number, like my parents, and go, oh yeah, let's just spend $5,000 a month. I think that's right. I think we should only do $5,000 a month because we're going to have more tax-free dollars, and that's awesome. And I don't think that's awesome. I think that's them passing away with too much money and an advisor trying to justify their fee. I would rather they go, you know what? We're going to spend $15,000 a year on vacations. We're going to plan on no inheritance. We're going to spend another $8,000. And by the way, I just feel better with more of a moderate investing approach. I just sleep better at night, knowing there's less ups and downs. Well, what would that do to the plan? Okay, yeah, so there's $3 million fewer dollars. Maybe John's politics change at work, and he wants to retire at 64, not 65. Okay, so yeah, now here they are retiring with $1.7 million. It's not $5 million. But what is this tax thing going to show? Well, if we click on this tax strategy here, now all of a sudden, do you guys remember what it said before? Before it said $4 million more dollars. Now it's showing $1 million fewer dollars by doing tax strategy. So what's the point of this? The point of this is a good advisor doesn't optimize your tax strategy. A good advisor goes, talk to me about your dream life. And in light of that, optimize tax strategy. Let me show you what I mean. This person, they should still do tax strategy. They should still consider doing Roth conversions. They should still be strategic here. It can add value. That's why people hire an advisor. Look at this. I clicked a few buttons here. I'm still recommending they do these Roth conversions in these years where their income is lower. It can still add value. This is a big reason to work with an advisor. But you see how this number says 800,000? And if I were to just say, hey guys, why don't you just do all these conversions and don't spend money and don't enjoy your life? You'd have less money. This is the tricky point of working with an advisor, which is why hiring the right advisor It's all about trust and ensuring you have someone that's really looking out for you, because they can unethically show you something that will show their value. They'll go, hey, why don't you pay me $30,000 a year for the next 20 years? Oh my gosh, you paid me $600,000. I helped so much. And by the way, you pay me $600,000, I'm going to make you $4 million. Okay, well, that's an easy sell. So people like my parents will be like, okay, yeah, I'll work with you. When the reality is that's not ethical. I don't want you 90 years old going, I had the best Roth conversion strategy and tax strategy. And yeah, maybe I didn't spend money or take my kids on trips, but like I had the best tax strategy. Is that the goal? Or is the goal, I retired earlier and spent more time with family? Excuse me, I get choked up with this stuff. I retired early and spent more time with family. I retired early and I was able to take care of my health, which you can't exactly quantify that on a spreadsheet. I retired early and I was able to convince my friends that they could retire earlier. And so now they got more time with their family. Like, retirement planning is not about retiring so early that you run out of money. It's not about retiring so late that all of a sudden you look back and you have $20 million. It's about saying, when is the earliest time that you are in a good spot to retire, spend what you'd love to spend, and dream big? Going back to this couple here, when I first started speaking to them, and yes, they are now clients because they don't want to do this in retirement. In terms of goals, they were like, hey, I think $5,000 a month is what we could get by on. I said, guys, what about long-term care? Are you planning for that? They're like, nope, we haven't done that. Okay, what about college for kids, grandkids? Nope, haven't done that. What about cars? How often are we going to buy them? Vacations, weddings. Are we going to downsize? Are you going to move? What about giving? What about legacy goals? What else? Like, are you going to buy an RV? So there's so much that this is most people is, I'm going to retire at 60 or 65 and spend $5,000 a month. That just doesn't cut it. So a good advisor, when it comes to like, okay, quantify, and I'll give you guys an example because I'm very transparent with this. Oh, not this one here. Let me go to this one here. Okay. This is a fee sheet, basically. So let's assume you're working with an advisor and you're paying them $2 million a year. Sorry. That'd be crazy. You're not paying them $2 million. You have a $2 million portfolio. Okay. Well, for example, the way it works here at Root is it's a tiered structure. Most people are similar to this. It's not rocket science. So what this means is the first $1 million always billed at 1%. That's $10,000. The next the next 70, I'm even confusing myself here because I'll explain this in different ways. The next $1 million is billed at 0.75%, 0.75%. So that's $7,500. So the all-in annual fee as a tiered structure is 0.88%. So this is that as a annual fee, and this is that as a monthly fee. So the question is, can an advisor add value to justify this? Okay, well, yeah, like some advisors can do tax strategy that is going to more than offset that cost. So some people are like, I'm going to work with you because if I could pay you guys, let's call it $17,500 or for easy math, $20,000 a year for 20 years or 30 years, like you're going to make me more money. And I go, that's not why you should hire us. Yeah, there's a lot of financial kind of quantifiable reasons to work with an advisor. It's going to be different for every single person. If you collect Social Security at full retirement age versus age 70 versus as early as possible, you're going to get very different numbers. And so I'll see advisors that will be unethical with this as well, and they're over projecting different things. And so it's important to know, what are the assumptions? Ultimately, the reason you're hiring an advisor, in my opinion, and I'm the first person to tell someone not to hire an advisor, is for this right here. I'm going to pull this up again. You are hiring an advisor so you don't have to do it. Time is your most valuable currency. This is the number one reason anyone hires us, whether they know it or not. It is the only non-renewable currency. If you're like, I think I could figure this out. I think maybe I want to do this. I think I want to be an advisor in retirement. Great. Don't hire us because you are going to love this stuff. Now, some people will go, I'm going to hire you though, because what if something happens to my spouse? They're not going to want to manage this. Maybe I'll hire you or any advisor because maybe you'll teach me things I otherwise couldn't have known. Okay, yeah, like we probably can do those things. But the reality is, I don't think that's why you should hire someone. I think you should hire someone to go, my life's going to be better. They're going to help me determine when I can stop working. I have a professional. But ultimately, it is that delegation. Now, not delegation like Okay, so here's how much income you can have, and that's the deal. It's a partnership. Most of my clients want to be a CEO. They like running it. They've done a good job. That's why they have $2, $3, $5, $10 million. But they want to have a CFO that's actually doing the day-to-day of creating the income, doing the conversions, withdrawal strategy. And when you have a lot more money, one mistake really changes your retirement, and it can be the cost of hundreds of thousands of dollars. So this is not me saying hire an advisor. This is me saying I will see unethical things advisors do, and I don't want you to go, well, they showed me something that shows it's going to outweigh the cost, so I'm going to hire them. No, that's the easy way out. If you guys are like really wondering, kind of want to go more, if you search, I think it's Am I Crazy? Yeah, I have the videos. Am I crazy to pay $30,000 a year to an advisor? Sometimes, but other times, and this is kind of why, to give you some insight, I can't say the names of all these firms, but my parents started with one really well-known name firm. I know that wasn't perfect English. A really well-known named firm. There you go, a little better. So I was going to say it's going to rhyme with, but then you'd get it. Okay, so they start with this firm, and they're like, look, it's one of the top 3 firms out there. We don't know what we don't know. We're going to start there. But what they found is the service wasn't optimal. And the company that they were working with also sold products. So it would be as if I'm like, hey, I work for Honda. Trust me, you need a Honda car. It's like, maybe there's another car. Conflict of interest there. Then this is my parents going, I still need help though. So then they're like, we're going to go to another advisor. And my friend, this is someone that lives on my street, they have like $20 million. They're big ballers. So they went to my parents and said, hey, I can ask my advisor, because you say you don't have one right now, if they'll work with you. And my parents are like, that would be the best thing ever. And my parents don't have $20 million, nowhere near that. So they got terrible service when they worked there because they were a really small fish in a big pond. Then they went to the super low cost solution in our industry, which many of you know. And they're like, look, this is good because it's like, I don't think I'm getting screwed in any ways, but like, I still need help. It's the tax strategy. It's the estate. It's the healthcare. Like, what do I do? And so that's the reason I became an advisor. I didn't want to be one because I saw what happened to my parents, and I was like, they weren't really adding value. And then I realized, okay, what is the value? And I will ask people very transparently. I'll say, hey, what's the number one reason like you're working with an advisor? And I'll share a few different stories, but the one that I'm going to show here is I put out this episode a while ago of life lessons from early retirees. And this person commented, and they said the following. So I'll end on this. They said, hey, I like your story on asking questions. I had something that hit me 5 years ago. A friend and work associate of mine retired at 68. He was driving around in his RV. I thought he was living, the retired life. He was traveling back and forth to the Mayo Clinic in his RV while sightseeing between cancer visits. When I caught up with him to have a beer, he was a shell of a man compared with the last time I saw him. He looked at me straight in the eye and said, Jared, can you retire? I had to really think. While I was saving to retire at 65 or 68, no one had ever asked me it directly. After some thought and using the 4% rule, I said that yes, I probably could. He said, do it, because blank like this happens. For the next 4 nights, I was haunted by that question and couldn't sleep until I made the decision to tell the owner of the company to start finding my replacement. My friend passed away shortly thereafter with 2.5 years. I don't want you to have to spend all of your time managing portfolio, tax strategy. Now, if that's something you love doing, different story. But this on my screen, when I ask people, hey, why are you paying us or any other advisor? Normally they'll say it's the tax strategy. It's the conversion analysis. It's the charitable giving. It's the healthcare. It's the real estate. It's equity comp or social security or business planning or DAX, whatever. And then a year goes by. I'm like, hey, why are you still paying me? And they're like, I don't want to have to do this. And I go, that's the goal. The goal is that you can spend time doing what you care about most. And that's the reason that I think someone should work with someone. So yeah, there's clear value, but that's not enough. A lot of our industry it's difficult hiring the right advisor, finding trust. So what I encourage everyone to do is, if you're considering hiring an advisor or route, go see what people say. Like, this is our free community. We have clients in here. We have people that are not clients in here. We have people that work with an advisor separately of Root that are in here. Go see, what do people say about working with Root? Like, what's the difference? Go kind of hear from our clients that are here. And get other ideas, whether it be about Vanguard or getting your spouse more involved in finances, or tell me why you chose your career, because you get to hear what people say. All of this is in the description below. Not my traditional episode. I know this was longer than most, but the most unethical thing I saw an advisor do is basically show, hey, don't enjoy your life. Look at me, quantify the value of working with me. Shouldn't you be happy working with me? And Now, the reality is they're probably trying to feed their family. That advisor is probably not the most unethical person. Now, I don't know, but this is an ethical practice that I've seen an advisor do, and there's way more out there. So finding that right advisor and having the right trust with that right firm, that's everything. So please know this should be not construed as one-on-one financial advice. This is for fun, educational, informative purposes only. But yes, I do hope it is informative so that you can make a good decision when it comes to your retirement. If you're like, hey, this sounds of interest, I want to maybe work with you guys, you can apply to work with us in the description below. And that's it. I'll see you guys next time.